Hello everybody, my name is Omar Torres. I'm a licensed realtor with Bay Area Property Exchange down in Tampa, Florida, but I service all of Central Florida area. So I wanted to make a video today very quick about home buying basics. I get a lot of questions. Omar, do I qualify for this house? Let's go over just a few things here right now quickly. So whenever you apply for any loan, first thing's going to be credit. They're going to pull your credit. Now, basic FHA guidelines say a 580 or better credit score with 3.5% down payment. Now, most lenders that I've seen don't approve people because interest rates are going to be high and there's going to be a lot of underwriting guidelines. So ideally what I've found is a 620 credit score or better is going to be where you want to be at as a minimum. But 660 would be the sweet spot where you get the best bang for your buck. Of course, if you have higher, that's amazing, and that'll be great, and it'll make things so much simpler, smoother for you. But I would say a 660 should be the minimum you want to get to. But if you only have a couple months, your lease is ending, and you want to and you have a 620, by all means, give me a call. We'll go ahead and make it happen for you. So here's the next thing where a lot of things get a little tricky. And that's going to be your debt to income ratio. So what that is your total obligations that you have financially by your income. So they subtract that from your income, that's going to be your debt to income ratio. So let's just use this as an example. Let's say you make $48,000 a month. Well, we break that down, that's $48,000 a year. So that's $4,000 a month. Okay? So, generally speaking, you'll probably get higher than 40%, but I just want to use this as a minimum. It's kind of a wide range, but just to give you an idea. 40% of 4,000 is going to be 1,600. 57% of 4,000 is going to be 2,280. So let's kind of go for a middle point around 50%. Let's say you get approved for 50% of your income, right? $2,000. So that means your total monthly obligations for all of your loans, credit cards, car payments, student loans, they cannot exceed more than $2,000 a month at 50% debt to income ratio. So you might be saying, hey, my student loans are in deferment, so that's a zero, right? They don't count that. Unfortunately, lenders typically have to put a number to that student loan. Let's say you have $50,000 in student loans. Well, the lender normally will take about 1% of that student loan as a monthly payment. What does that mean? $500 a month for your student loans. Forgive me for the sloppy handwriting. So now we're at $1,500 a month as to what you can afford. Sometimes it's better off just to set up that arrangement with your student loan program, so that way you might be paying $200 a month. That's a huge difference. So next, car loans, right? A lot of us have them. So let's say your car loan is $400 a month. All right. And then let's say you have some credit cards, right? Let's say you have 3 credit cards. You might pay, you make minimum payments. That's all they include is the minimum payments. Let's say it's $100 a month. So now you're literally left with $1,000 a month for your monthly payment. Credit cards. So $1,000 a month for your monthly payments. You see how that all kind of took away. That's why the major killer that I've seen in a lot of people that ask me and that go through the pre-approval process. Alright, so the next thing is going to be the pre-approval process. Alright, so as discussed before, it's going to include the credit score, getting your credit pulled, They're going to have to factor in your debt to income ratios, but they're going to need a few other documents. What are they going to need? Pay stubs. Why? They got to verify your income that you actually make that $48,000. The bank is going to need that. What else are they going to need? Tax statements, W-2s, and your actual tax statements that you filed. So, W-2s and tax returns. Why? Well, if you're writing off half your income, guess what? You don't make $48,000 a year, you make $24,000 a year. So those two are going to be needed as well. Just about every lender I've ever seen always requires them. So tax statements, W-2s. Now this is for, generally speaking, if you are a W-2 employee where you work for an employer. If you're a business owner, obviously you don't have W-2s, but you are going to need your tax returns, and they are going to base it off of how much you file. So if you're writing off half of the money you make, guess what? I'll go into some tricks for business owners later on as to how you can kind of get around this. So anyway, tax returns, W-2s. They're going to need your bank statements. Don't be overdrawing. Okay? They need all of your bank statements. So if you have 3 different bank statements, me personally, I keep a lot of different banks around, and I had to give all of them when I got pre-approved to buy my house. So they're going to need copies of your bank statements. Also, if you have 401k, that's also very beneficial. Down payment. How much money do you need to put down? This also is going to vary, okay? But I would say a safe amount, try to have around 4%. And the reason why is most people are going to try to get an FHA loan. And with an FHA loan, it's a 3.5% down payment. Now, there are some great loans out there. If you're a veteran, first off, you get some great loan options where you don't have to put any money down. You can finance 100%. But also as well, if you are in a rural area, for instance, I live in Land O'Lakes, Florida. Certain parts of Land O'Lakes, Florida do qualify for a USDA loan, which is 100% financing. Same thing with Zephyr Hills, Florida. So once again, you want to contact either a realtor or a mortgage loan originator, so that way we can find out what areas qualify for you. But those are great options there. Those, you don't have to put any money down necessarily, or very little down. But if you want to be in the city, you're going to be looking at least around 4%. 3.5% down, plus I always say a little bit extra because you got to pay for inspections, appraisals. So I always say have a little bit extra money available. Now, the time frame, right? How long does this take? I've had somebody be pre-approved and we went out, a couple times, boom, they found the house they like, and a month later they're closing. And they could have closed sooner, but the people had to move out of their house. So, it really all depends on factors. So what are some factors here? Do you have a lease that's expiring soon? Do you have to give them 60 days notice? Well, how picky do you want to be with buying your first house? Okay? Well, if you have 60 days notice and your lease is up in April, for an example, well, you've got some time. Maybe you can start working on your credit. That'll help out. You're working on your credit goes up above 660, boom, we're good to go. Now come January time frame, get your credit pulled, hey, you're all set. You've got all your documents in order, you're good to go. Do you have a lease that's going to be ending at the end of this year and you've got to give them 60 days notice? Well, hey, you might want to start getting the ball rolling now. Hopefully your credit's in good shape and we can get started now, because it is going to take you a little while to find a house. And what I mean by a little while, it really depends as to how picky you want to be with the house you find. So if you just need 4 walls and a roof, hey, that's going to be really, really easy. But if you need to have, garden bathtubs and, stand up showers, and you need a railing and whatever it might be, whatever you need in your house, if the pickier you are, typically the more you're going to be out there searching. But again, we're happy to help out. That's what realtors do. We're happy to narrow it down for you. Give me a call. Give a realtor a call, and we're happy to help out. Um, but that's generally the time frame. I would say once you find a house you like, 30 to 45 days to close on that house. So let's say, use that example, your lease is up in April. Let's go 45 days, April 1st, 45 days back, we're looking at the middle of February. And then let's say it takes another month to find that house, middle of January. Let's go ahead, pull credit, get all those documents in around the middle of January, and then that way you're closing by the beginning of April. But also I would say you don't want to close and move in the same weekend. Plus you also want to leave in case the closing gets delayed. So what I would say is the beginning of January you want to start looking. That way you're moving out by the middle of March and you're out of there, moved out. You can take your time to move in and clean up your old apartment. So those are just some very basics. Again, I'm going to leave my information down in the description. If you have any questions at all, please feel free to contact me.